Your Excellencies, dear colleagues, ladies and gentlemen, good morning and thank you for joining us today. It is my pleasure to lead through the opening session of the 14th Conference on Payments and Market Infrastructures, this year under the title Flourishing Digital Payments Future. Today we have a list of very distinctive speakers. We will start with the Governor of the National Bank of North Macedonia, Anita Angelovska-Bežovska. Governor Bežovska, the floor is yours.
Good morning. Dear Governor Tabakovic, Your Excellencies, Ms. Van Dyke, distinguished speakers, ladies and gentlemen. It's my great pleasure and honor to welcome you at our traditional conference on the payments and market infrastructures, which is organized the 14th time in collaboration with the Dutch Central Bank, which we deeply appreciate. Given the perpetual changes in the payments industry, the conference has always served as a valuable platform for discussion on the latest trends, innovative ideas, as well as new risks that innovation by definition brings. There is no doubt that the process of dramatic transformation of financial industry, which has been in place for years and significantly accelerated by the pandemics, continues. At the forefront of this transformation are the payments, where new payment systems, new payment methods, and new players are shaping the payment landscape. We are witnessing a proliferation of fast, instant retail payment systems across the world, making payments more convenient, easily available, and fast. According to the BIS, currently, fast retail payment systems operate in 45 countries, with expectations for this number to climb to 60 in the near future. Payment methods are evolving as well. Payments are becoming increasingly cashless, thus being one of the main drivers of the strong financial inclusion worldwide, supporting the development of digital economies and driving innovation. According to the latest global Fintech survey of the World Bank, 2/3 of the adults around the world made or received at least one digital payment. In high-income economies, 95% of the adults did so, compared with 57% of adults in developing economies. Although a gap between developed and developing economies is visible, yet in the latter group, major positive shifts have been taking place in recent years. The share of adults involved in digital payments has grown rapidly by 22 percentage points in the last 7 years. These trends are also present in the Macedonian economy, where 74% of adults were involved in digital payment, which practically means an increase of 20 percentage points in the last 7 years. Even more importantly, according to the PricewaterhouseCoopers analysis, global cashless payment volumes are set to increase by more than 80% by 2025 and to almost triple by 2030. This innovation in the payments methods is significantly underpinned by proliferation of newcomers in the payment landscape, which have significantly increased the competition, of course, to the benefit of the consumers. According to BIS, non-bank players that provide payment services now account for a quarter from all payment institutions, up from only 14% 6 years ago. There is also an increase in e-money providers, but to a lesser extent. This significantly affects the environment in which banks as traditional players operate, bringing threats but also new opportunities. Although new players have advantages as they are less robust and less regulated, the big data analytics and artificial intelligence are providing to the banks opportunities to keep pace with this ongoing transformation. The recent EBRD survey indicates that dominant part of the banks consider fintech to be more of a threat than an opportunity, pointing to a strong competition in the area of digital payments. Still, it is encouraging that banks identify digitalization as one of the top priorities. In fact, 46% of the surveyed banks pointed that digitalization will have profound bearing on their businesses over the next 25 years. The survey conducted by our central bank points to a similar conclusion. Banks' awareness and focus on the digital transformation appears to be accelerated by the pandemics. All of the banks declared their plans to increase their investment in digitalization, and 38% of them intend to increase their investments in fintech companies. Which are the major forces that have been shaping this digitalization or digital revolution in the payment industry in terms of new payment systems, new methods, and new players? More broadly, there are three groups of factors defining the digital era of payments. First, technological advancement. Second, regulatory environment. And third, evolving consumer preferences. Safety and efficiency of transactions remain the main underline of the modern payment system, but speed and convenience are becoming equally important requirements by the consumers. No doubt that the COVID pandemic and related lockdowns influenced the consumer behavior and preferences markedly. The share of non-cash payments in the total GDP sharply increased across the globe. And according to one of the latest surveys, 90% of respondents agreed that the shift towards e-commerce would continue to increase, requiring significant investments in online payment solutions. Looking forward, it is clear that these factors, namely technological progress, consumer preferences, and regulatory environment, will continue to shape the future of the payments. In addition, we should not lose sight of the CBDS initiatives, which in essence are policymakers' response to the digital revolution. In fact, the digital currencies of central banks are predicted to have the most disruptive impact in the payment system over the next 20 years. According to the latest data, 105 countries, comprising 95% of the global GDP, are researching on the various aspects of digital currencies, while this number in 2020 was only 35. We, as a central bank, has also envisaged a medium-term project to explore the benefits that digital currency can bring for the Macedonian payment system, but also more broadly for the overall economy, but also to explore the risk that it may imply for the financial stability and monetary policy. CBDS are expected to be in particular beneficial for financial inclusion, which in turn, as documented by many empirical studies, have positive effects for the growth prospects. Worldwide, there has been significant progress in recent period, but still around 1.4 billion of people remain unbanked. Also, in the Macedonian economy, there has been a notable progress in the financial inclusion, measured through the access to credit and debit cards and bank accounts. 85% of adult population has a bank account, which is above the world average of 76% and 71% of the developing economies. Still, despite the progress, gaps to advanced economies remain, gender and age group gap in particular. It is critical to build on these encouraging trends, especially given the current headwinds, accelerating inflation and decelerating growth that hurt poor the most. Evidence shows that households and businesses that have better access to financial and payment services are better able to withstand financial shocks than those that do not. Overall, it is apparent that tectonic changes are occurring in the payments and financial industry in general. It is a confluence of many factors and many involved parties. These include central banks, governments, traditional finance industry, and new players at the markets as well. Therefore, all the efforts must be coordinated, inclusive, and based on a strong mutual partnership. In this way, as a central bank, we have already embarked on a number of activities for setting the stage for faster penetration of innovation in finance. We established the Innovation Gateway in 2019 as a platform for a dialogue with fintechs to facilitate the entry of new technologies in finance. Furthermore, 2 years ago, we conducted a thorough survey to landscape the development of the fintech sector and to assess the opportunities and barriers for faster innovation, which clearly pointed to a regulatory and small market size barriers. Meeting the challenge with full enthusiasm leads us to another joint journey with other financial regulators, preparation of our first national fintech strategy. These highly coordinated institutional efforts are expected to create synergetic effects in the design and implementation of envisaged steps. With the new law on payment services and payment systems that was adopted this year, we, as authorities, have created a regulatory framework which hopefully will catalyze flourishing digital payments future to be written successfully in our country as well. Having in mind the small size of our economy, we highly appreciate regional initiatives conducive to faster and cheaper domestic and cross-border payment services, such as the ongoing initiative to connect Western Balkan economies with the target instant payment system of the European Central Bank. Also, thanks to my dear colleague, Governor Tabakovic, and her team, we are currently exploring the possibility of deepening our already excellent cooperation by connecting with a payment system operated by the National Bank of Serbia. All these regional efforts mean additional steps in connecting our businesses, connecting our citizens, and more broadly, connecting our economies, thus supporting each other in our mutual strivings to higher income convergence. I believe that during the conference, we will see, we will learn and hear about flourishing digital payment future, which will change payment behavior and experience for all of us and build a more convenient, safe, and accessible payment world, as this is a new and highly innovative world in which, as it is said, what is now proved was once only imagined. I wish you an enjoyable and rewarding virtual conference. Thank you.
Thank you, Governor Pežeska. Our next speaker is the Governor of the National Bank of Serbia, Jorgovanka Tabaković. Governor Tabaković, please take the floor.
A new industrial revolution to which technological advancement contributes the most. This advancement has brought numerous benefits to humankind. The benefit that I like the most is the facilitated spread of knowledge and experience. I therefore wish to thank you for the invitation, but also to welcome you to the 14th Conference on Payments and Markets Infrastructures, which our friends and colleagues from the Republic of North Macedonia, together with the Central Bank of the Netherlands, have been holding for years already, and with great success, I must add. As the years go by, new topics arise, new achievements are made, and payment services and the network of market infrastructures are becoming increasingly more sophisticated. This tells us, to my satisfaction, that we as a society are developing for the better. English philosopher and statesman Francis Bacon said that knowledge is power. Spreading knowledge by sharing it with neighbors, compatriots, and colleagues brings benefits to the entire humankind. The present times bring novelties both in the financial sector and all spheres of life. This is something we should not flee from, but we should rather thoroughly examine everything those novelties bring. We all know that the financial service sector has witnessed enormous changes, and that smooth functioning of payment system is exceptionally important for the stability and efficiency of the financial sector, and this will never change. The National Bank of Serbia, which I had governed for an entire decade already, is carefully monitoring the market and the possibilities offered by the technology, and based on that, it is creating new services and new payment system and introducing new laws. We are among the first in the world to launch a state-of-the-art instant payment system, the NBS-IPS system, enabling citizens and businesses to make their payments easily, quickly, and, what is the most important, securely, from any place in the country, 24 hours a day, all year round, with money available to the payee within a few seconds only. The fact that citizens and businesses have recognized the benefits of this system is shown by the statistics that the number and value of transactions carried and through this system are constantly rising. Since the inception of the system until today, over 113 million transactions have been carried out, and the average time of execution is 1.1 seconds. Aware of our role of a change catalyst in our country, the National Bank of Serbia did not stop here and there. Owing to a well-established infrastructure to its IPS system, it is introducing new, innovative instant payment solutions. By using the mobile banking application, our citizens can make instant payments at physical and online points of sale. They can pay their bills at any time of the day from the comfort of their home by scanning the QR code with their mobile banking applications. They can also make instant transfers of money at any time of the day, all year round, knowing only the mobile phone number registered by the pay for the service. We have our national DINA card, and we have been constantly modernizing it, aware of the importance of costs, but still more so of the independence and stability of the domestic financial system. We also established cooperation with two large international card systems, American Discovery and Chinese Union Pay, enabling the use of DINA card abroad as well. We have also seen a rise in cashless payments. In the past 5 years, the number of mobile banking users in the Republic of Serbia has risen by 254%, while the number of electronic banking users has increased by 106%. We enable financial services consumers in the Republic of Serbia to conclude financial service contracts by using video identification with full transparency, security, and protection of citizen rights. Just like everyone, we sometimes ask ourselves whether our huge efforts have a purpose. However, the figures are reassuring and instill ease with courage to move forward. As many as 3,006 and 6,044 distance contracts have been concluded until today, up by 45% compared to last year. Answering market needs, we have also adopted the law on digital assets, whereby Serbia became one of the few countries in the world to regulate this area. By weighing up the benefits of introduction of a central bank digital currency in the environment where instant payments have fully taken root, we are currently analyzing the introduction of a new financial instruments for the functional and technical aspect, while also examining the legal framework necessary for the functioning of the payment instruments. As regional cooperation is important for our country, we participate in the Open Balkan Initiative, jointly contributing to the region's prosperity. To enable more efficient and cheaper payment transactions in euros for citizens and businesses, the National Bank of Serbia introduced the systems of international and interbank clearing of FX payments, which enable the transfer of funds in euros every businesses day among system participants. In addition to banks with their head offices in the Republic of Serbia, participants in the system of international clearing of FX payments include banks from neighboring Bosnia and Herzegovina, pursuant to the agreement on clearing of interbank and international payments concluded between our two central banks. I must also mention a great advantage of these systems, which is reflected in low costs for participants. Participants can also carry out for their clients within the same day the transaction for orders sent until 2 o'clock. The success is illustrated by the steady growth in transactions. I wish to highlight that in 2021, turnover increased by 41% compared to 2020, and in 2021, turnover was worth 773.6 million euros, and the upward trend continued into this year as well. I often like to emphasize the importance of international cooperation, which is why we launched the initiative with some countries in the region, among others with our dear colleagues from the Republic of North Macedonia, to join the international clearing of FX payments, which would further strengthen regional cooperation and increase economic prosperity. Financial system connections can only be beneficial, not detrimental to our states and citizens. Infrastructure, once established, will enable even greater exchange of goods and services, while efficient payment operation should serve as support and bedrock for the exchange. We know the digital payments are going along a difficult and long development path. The COVID pandemic doubtless brought about the popularization of digital methods of payment, which should certainly be one of the strategic objectives of each central bank. However, a cautious regulator must strike a balance between development and safety. Our great writer, Miloš Crnjanski, said that hope is the highest degree of wisdom in human life. So let us hope for the better. Let us be diligent and creative, helping each other and working towards the joint interest of mutual cooperation and harmony. Nothing is impossible for those who work tirelessly and with dedication. Inspired by the name of the organizer's highway, I wish all of us to always go along the paths of friendship. Thank you for your attention, and I wish you all a successful conference and plenty of health. Thank you, dear Anita, for this conference and for your invitation.
Thank you, Governor Tabakovic. Now I would like to invite our next speaker, Inge van Dyke, Director of Payment and Market Infrastructure in the Netherlands Bank. Ms. van Dyke, I hope I didn't mispronounce your name. Please take the floor.
Thank you, Daniela. No, that was excellent Dutch, by the way, and I hope to be able to do the same. Dear governors, dear everybody who joins this conference, good morning to everyone. Dobre utra na site. I hope that was the same thing. Just as Governors Bevoska and Mrs. Tabakovic, I would also like to give you all a warm welcome to this conference, jointly organized by the National Bank of North Macedonia and the Nederlandse Bank. Also this year, unfortunately, I would say we have to do this virtually, but I do hope that we will have the opportunity to finally meet in person next year. Today and tomorrow, you will be discussing the challenges and opportunities to enable flourishing future of digital payments. Like in many countries across the world, also in my country and in yours, we see an ongoing digitalization of our societies, including in payments. New market players have entered in the payment chain, including fintech and of course also the big tech companies. At the same time, we have seen a slew of new cryptos and stablecoins entering the market, and central banks around the world are developing their own digital currencies or considering to do so to complement the declining use of banknotes and coins to ensure that we have a public payment instrument alongside the private initiatives. This is important for our strategic autonomy and to ensure that we have a monetary anchor in place. For us as central bankers and supervisors, our task is to ensure that society can always rely on the payment infrastructure. Without trust, the monetary system and the growth of prosperity may falter. And this requires keeping a sharp eye on societal, market, technological and legislative developments at national level, European and also global these days. When heading towards a flourishing digital payments future, please let me touch upon three conditions, three prerequisites that should deserve all of our attentions to be met. The first prerequisite from our perspective is maintaining a robust and secure payment infrastructure in the face of changes. Digitalization has greatly increased the dependence on electronic infrastructure. Just as an illustration, today in the Netherlands, our public money retail payments number is 13% of all transactions. Effectively, we are almost completely digitalized, close to Sweden. So from that perspective, we are considering what we need to ensure that the payment system stays alive, also when we have an electronic outage of some kind. These things have been in place for some time, but there are new kids on the block, so to speak, that threaten that business continuity. A failure of systems is just unthinkable, especially as we are interconnected more and more. Extensive efforts must be made, therefore, to ensure that the millions or billions of daily payment transactions can be processed securely at all times, also when cybercrime attacks may be more and are more frequent, sophisticated and disruptive. The second prerequisite is about ensuring access to payments in an increasingly digital world. Some people in vulnerable groups, certainly in my country, and I know also in some other countries, find it increasingly difficult to use payment services. They are not up to speed on the digital area, and they need additional training and additional services. They are experiencing a deterioration of accessibility and of availability. Their bank offices are not as close as they used to be. They have difficulty in accessing their phones. So we need to make sure that they are included in the payment systems. Sometimes cash is just becoming harder to use and to obtain. Some groups find it difficult to open payment accounts and access services because financial institutions exclude them in advance as part of their integrity or compliance policy. They find it too difficult to handle these type of customers, so-called de-risking. I'm curious to see and to understand whether, to what extent these issues may be also going on in your country areas. I will take the opportunity here also to shortly focus on an important aspect of the second prerequisite of ensuring access to payments, and that is that we should ensure that public money remains accessible, also in a world that has benefited greatly from private instruments and where digital payments are flourishing. A number of payments that consumers make with public money by central banks, in other words, cash, is steadily declining. Certainly, COVID has aided to that. So it has upsides, but it also has downsides. The convertibility of private money into public money is key to an order and keep trust in the monetary system. Therefore, the Dutch Central Bank is actively, together with other Eurosystem national central banks and the ECB, preparing for a digital euro so that it can be introduced if required. This decision will fall by the end, around a year's time, I would say, October 2023. Such a digital euro will need to enable citizens to use public money for digital payments, just like they can use cash for physical payments. Bringing central bank money into the digital area is a logical step as payments become increasingly difficult, and we need a public alternative alongside all these private payment institutions that are highly qualitative but still privately owned. A digital euro would contribute to the strategic autonomy and economic efficiency by offering a European means of payments that could be used for any digital payment. It would meet our societal objectives and would be a base for a European infrastructure. In short, it would ensure that access by all European citizens is granted to such a digital euro. And of course, it must be designed in such a way that it is also attractive to use for users. Giving it legal tender status would help to achieve the network effects that are key to the success of payment solutions. We will strive for high privacy standards and aim to contribute to the financial inclusion. As for implementation, time to market is of essence, but quality must always precede, and risks, costs, and ecological footprints associated with such a digital euro are also something to keep in mind. The digital euro will probably build on the experience of financial intermediaries in the consumer-facing payment services. We explicitly do not want it to crowd out any private means of payments, and it should preserve, in the end, the financial stability. Now back to the three prerequisites when heading towards a flourishing digital payments. The third and last condition that I want to touch upon is how to strengthen European and global payments. For increasingly, we are not in a national scheme anymore in the Netherlands. We are in a European community, and we need to make sure that our European payment system is secure and robust at all times. The international playing field is fast moving. Large technology companies are and have entered the payment chain, alongside with specialist fintech companies, for example, in the Forex area. Banks and payment institutions have long played the main roles in the payment infrastructure, and we should applaud them for that, alongside with major international card companies. The arrival of new market players may spur greater competition and innovation. I would say it has spurred greater competition and innovation, but it also entails risk with respect to privacy, to being able to keep the right oversight over these vital payment infrastructure, and with regard to market power and dependence on non-European parties. It places a further strain on the business models of the existing parties, and it shows that harmonization and standardization in Europe need to pick up pace to build a stronger internal payments market. This applies also to payments to and from non-Euro countries and non-EU countries, which are still often costly, slow, and inefficient. We are, as you may understand, very committed in meeting the G20's objectives to improve cross-border payments. Faster, cheaper, and more transparent payments by 2027 is the goal and will be the starting point, hopefully, of the important payment summit chaired by our Governor Klaas Knot later this month. This will require extensive cooperation between public and private sectors worldwide. Let me conclude what unites us and what we should stand for together while heading towards a flourishing digital payments future is maintaining robust and secure infrastructure in the face of greater digital dependence. We have too. We must ensure access to payments in an increasingly digital world and not forget those who are not so digitally adept. And finally, we need to ensure and strengthen the European and global payments in a dynamic international playing field. Thank you very much for the constructive and ongoing collaboration between our two central banks. I believe since its first edition already 14 years ago in 2008, this conference has proven time and again to be worth attending, and I'm sure this time will be no different. I wish you all an inspiring 2 days. Thank you. Vivacolodara. Dank u wel.
Thank you, Ms. Van Dyke. And thank you very much to all the speakers. Now we start with the panel discussion. I'm inviting Ms. Biljana Donovska-Gečeva to take over and moderate the working part of the conference.
Thank you, Daniela. Good morning, and thank you for coming to this session, to all of you. No doubt the COVID-19 pandemic has confirmed to us that we are already in the era of the digital world and hasten the digital shift with consequence for our everyday life. Sometimes it can seem like we've uploaded our whole lives in the nebulous cloud of digital information. The problems with the new digital way of life are well known for all of us. In the context of the epic risky nature of living our lives digitally, one of the European Commission's 6 strategy priorities for 2019-2024 is to create a Europe fit for the digital age. The aim is that the technology will work for people, the digital economy will be fair, and that it supports an open, democratic, and sustainable society. This is an important topic that is affecting many of businesses, so we 3 esteemed members of the banking and finance sector during this session, we are going to discuss where are and how to respond to challenges and opportunities in use of digital payments that we are all concerned about. Today, I have honor on the first day of this traditional conference to accept the first challenge and to use this opportunity on this panel together with today's respected panelists to perceive payments in the post-COVID world, then to touch few really important topics of the use of digital payment today and into prosperous futures to hear about the motivations of the central banks to develop a central bank digital currency, and last but not least for this panel session, to learn about regulators' multi-level approach to technological changes. Joining us today are Mr. Gabriel Soderberg, who is a financial sector expert in the Monetary and Capital Markets Department at the International Monetary Fund, focused on the development and possible future use cases of central bank digital currency. With a background at the Sveriges Riksbank, Sweden's central bank, he has worked on and published on the Swedish CBDC project, the e-krona, fintech, crypto assets, and broader issues with the payment sector, banking regulation, and financial stability. He is Associate Professor of Economic History at Uppsala University, Sweden, and has researched and published broadly on different subjects. We are also joined by Product Manager of the Digital Euro project, Mr. Ignacio Otero. He works at the European Central Bank and has led the innovation team which initiated the project. Previously, he was responsible for the evolution of Eurosystem services in the area of market infrastructure and evolution manager for target instant payment settlement. Mr. Terrell was involved in the T2S project from its conception in 2006 to go live in 2015. Before that, he worked on several reports of the Committee on Payment and Settlement Systems between 2000 and 2005. Mr. Terrell holds a degree in economics and business administration from the Central University, I'm sorry about the pronunciation. And my colleague, Mr. Igor Velichkovsky, is also with us today. He is a manager of a payment systems department at the National Bank of the Republic of North Macedonia. He is involved in the regulatory oversight and operational role of the central bank in the payment systems. He has been working for the National Bank since 2000, and his previous work experience was closely related to monetary policy implementation and foreign reserve management. Unfortunately, for some urgent reasons, Mr. Pereira had to cancel her participation on this panel. The global economy is going through a digital payment revolution. COVID-19 has forced countries across the world to modernize their payment systems in order to sustain economic growth and has also led to an increased use of digital payments. We could consider that there is one channel that is soaring during this current pandemic, digital, and that we need to reap the benefits of our increasingly digital society and face the challenges it brings. The world has a crucial opportunity to build a more inclusive and resilient economy and provide a gateway to prosperity for the billions of people, said Bill Gates, co-chair of the Bill and Melinda Gates Foundation, one of the supporters of the global Fintech database. Mr. Soderbeck, what are questions that the booster of digital payments, COVID-19 pandemic, raise in front of the central bankers regarding security, efficiency, privacy, financial inclusion, monetary policy, and financial stability, cross-border flows also. So my question is for you.
Yes, can you hear me?
Yes, we can hear you.
Does it work? Excellent. So I should start with saying that to apologize because it's 3:40 here in Washington. So if I say something that is doesn't sound so smart, it's because of the very early time. But nevertheless, it's a fantastic. I'm very happy and pleased to be able to join the panel today. So I think your question is very well poised. I think that there is indeed there has been, I think, a boost for digital payments after the COVID-19 pandemic. Still too early, I think, to know that whether this will persist in all countries, whether it was just a temporary boost, or I think some countries in which cash is traditionally very strongly preferred, I think there is a risk that that cash will continue to, so the digital boost of COVID-19 will fall back a little bit. But we need to wait and see to what the staying power is of this boost. But I do think that in many countries, particularly in countries and areas where cash is already dwindling, I think that this will be permanent. And in a sense, what has happened is only that it has made trends that we already have seen for quite a long time, they've only sped those up. So, and that is, of course, and I think you said that these are opportunities as well, but we also need to think about risks here, and also how it changes what a central bank is actually doing, unless we think about what kind of role do we want the central bank to have in the future. So I think there are two main implications for this, and I think the first has to do with principles. What is really a central bank meant to do? That's the first thing. The second has to do with more risks that we need to think about, and the central bank in particular has to think about. So the first is, I think we need to be very clear about that if a central bank doesn't issue digital money, then digitalization of payment is the same thing as privatization of payments and money. Because cash is, in most countries, the absolute majority is issued by central bank. They are public money. Whereas digital money, it is available for banks in wholesale form, because banks pay each other using basically wholesale CBDC, which is digital money, but it's central bank money, but it's not available for retail use, only for certain eligible institutions. So we can absolutely debate for a long time. Do you hear me, by the way? I see my screen is do you hear me?
Now we can hear you better.
Maybe I have to. There seems to be something with. Let me. Do you hear me better now?
Yes.
It's better probably that I
yes, now
shut
it's
down.
better. You can continue.
Yes.
Thank you.
Yes. So what we need to realize, I will return a little bit back, is that if the central bank does not issue digital money for retail use, then the digitalization of payments is essentially the same as privatization of money. And we can debate the implications of this for a very long time, and we are doing so. But what we need to understand is this surely imply a much smaller role for the central bank compared to an economy in which a central bank does issue money, which is used for a significant portion of payments. So essentially what we are seeing is a very substantial transition to another kind of economy. And we should be clear that this is happening as we go along, not because a decision has been made that this is what we want to do. This is something that is this happens because of technological development and shifting consumer preferences. So I think we need to see that and then discuss what that means. But the second, I think, has to do with potential risks. And there are a few of these, and I think the first has to do with the question of the resilience of the payment system and ensuring that essentially people can make payments no matter what things are going on at the moment. There can be natural disasters, there can be geopolitical tensions, wars, but even such things as operational malfunction. And of course, a digital payment system is much more vulnerable than a physical system based on physical payments. And I think again here that, of course, a cash system is also weak. It has weak points, such as you need to transfer cash from one point to another using trucks, etc., etc. So it's not the case that cash is completely invulnerable. That's not the case. But we need to understand that when we use digital payments and we rely on that to a much more bigger degree, which we will do in a fully digital payment system, we're also opening ourselves up for considerably larger vulnerability in terms of disruption of these services. The second risk I want to take up has to do with competition and how to ensure that there is a sufficient amount of competition in the payment sector. And what could, for instance, bad competition lead to? Well, of course, high user fees, low innovativeness, so that the future prospect of delivering even better payment services aren't being met because of lack of competition. The third is access for everyone. We already have, I think you mentioned that before, that there will be digital thresholds for some people to access digital payments. So we need to understand that there might be the case we need to ensure that everyone can use these services and also that they can make basic payments, because that is basically a prerequisite of survival in a market economy. You need to be able to buy what you need. Otherwise, you cannot do anything in this society. The fourth, I think, has to do with sovereignty, monetary policy sovereignty. In case there is a foreignly issued digital currency, or even internationally issued, such as a global stable coin, etc., and if there is a substantial adoption of these this digital currency in a specific country, then the possibility of the central bank to basically maintain its monetary policy can be undermined. The fifth, I think, has to do with trust. And again, I think the first speaker from the Bank of Netherlands, I think, addressed this, which has to do with, can we really ensure that a system in which there basically is no public form of money to underpin trust in the whole system, can we trust that to be really viable? So I think in overall, if we summarize this, we have to ask ourselves, is a payment system that is totally in private management, is that capable of securing all these 5 points that I have mentioned? And if the answer is yes, then by all means, we don't need a digital central bank courtesy for society. But if the answer is no, then yes, the answer is we do need a central bank digital currency. If the answer is no on that question. So I think, again, we have to think deeply about what do we need to ensure that the future digital payments system can deliver, and how do we do that? And can we ensure that and can a totally privately manageable managed system deliver that? And that's what we really need to consider, I think.
Thank you, Gabriel. CBDC are receiving more attention than even before, and the motivations of the central banks to develop central bank digital currency just confirm that. My next question will be for Mr. Terrell. So how the growth of the digitalization of payment is a driver for CBDC based on European research? Some key features have been identified that would add value to the potential users and confirm the needs for CBDC.
Thank you very much, Biljana, and thank you very much for your invitation to this conference today. It's already been very, very helpful to listen to the previous speakers. I would take your question by splitting it into a few questions. Perhaps the first one is, we all know that most central banks in the world are considering today whether to issue a CBDC, and one can ask themselves, what has triggered in the last 5 years this sudden actions of many central banks in the world? And one can even consider, is it more the decrease in the usage of cash for payments, in particular with the impact of COVID, or has it been more the emergence of cryptocurrencies? So we in central bank literature, you would probably see both mentioned. I would make the case, if one has to choose one or the other, that it's very related to the evolution of cash payments. And in fact, you see central banks like the Riksbank or the Nederlandse Bank, where that decrease of cash usage has taken place before, take a more prominent role. To explain CBDC, I like to also give an historical perspective, and I think we can go to the period between the end of the 18th century, where mostly coinage was used as means of payment, to the end of the 19th century, in which paper money had become much more extensive. And of course, it's not a coincidence that in that 19th century is where many of the world central banks were created. So one could see then a gradual change in the preferences of people from paper money to coinage money, and in doing so, it was the time at which, from what was, let's say, the sovereign authorities of the time, considered that just like the sovereign had always been issuing coins, the sovereign had to issue, in this case through central banks, also paper money. So it's been a kind of constant in history that the sovereign has been involved in issuing what is the prevailing form of money. This is connected also to, if we ask, I think reiterating points which Inge made on what would be the digital euro's objective. So the first one is to preserve the digital euro as a monetary anchor, giving public access to central bank money and being widely accessible to prospective users in all euro area countries. So if we look back again into the into the 19th century when banknotes were issued. All banknotes contained a promise that the central bank would deliver effectively gold or silver, the metal money on which the trust of the people lay. So it was the issuance of paper money relied on that confidence on convertibility into gold. Over time, that confidence was so large that hardly anybody actually went to the central bank to ask for the monetary anchor that was basing that, and it came to the point on which, as you know, with fiat money, it's ultimately the confidence in the mandate of the central bank for price stability, which undermines which is the monetary anchor. It's no longer the convertibility to gold. So let's say preserving, if you consider now a bit of a similar situation, at least in some countries where even the possibilities to use cash may become more remote, preserving that element that the general public has access, as Gabriel said earlier, to public money, not just because it's public, but also because it's the monetary anchor, because it's what is determining the value of the currency in a given currency area. That helps to build the confidence that whether I hold money with Bank A, Bank B, or the central bank, that money ultimately has the same value, even if the issuers behind are different issuers. So this is explaining a bit why it is important, and I think in particular in the euro area, which is a currency union, it becomes particularly more important, I would say, to have that visibility of the monetary anchor, like banknotes, and perhaps in the future with digital euro. A second key objective on our side is that the digital euro would defend the strategic autonomy of the euro area by increasing the independence from non-European payment solutions and the potential rise in this respect of foreign private digital monies or foreign CBDC. So let's say that's also been a constant over history, that for the sovereign it's been important to preserve that strategic autonomy in its monetary policy, that the currency it issues, it's widely used across the currency area. Now let me end with a very good question that you asked me, and perhaps it's the question I get most when people in the street know what I work on. So what would make a digital euro value added vis-a-vis digital means of payment, such as, say, cards today? So perhaps a first element, it was emphasized by Inge, is that we would in any case not issue a retail CBDC, a digital euro, by ourselves. We see it as a public-private collaboration. So we need to ultimately establish the means for citizens to be able to hold digital euro accounts with supervised intermediaries. We would not see ourselves, for example, as a central bank, as the ones issuing accounts to citizens. We would be issuing the liability which provides that value to citizens. But it's just like today, citizens typically go to banks, to ATMs for cash. It is not something which a central bank can do alone. So we asked this question, I think around 9 months ago, in the context of what we call focus group research, in which we went through a company which does this kind of research. We tried to gather what features would be more important in a new payment means in general, and if it's issued by the central bank in particular. And there were some aspects which where, let's say, it's similar characteristics to what you would expect citizens to appreciate to have already perhaps in digital payment means today. So the fact that settlement would be instant is highly appreciated. Having contactless payments is highly appreciated. Having easy to use, secure, reliable, and fast means probably having authentication via biometric features was highly appreciated. And also, of course, cost efficiency. So users express preference for all these functions to come at the lowest possible cost. So here you would not see really a factor of difference with existing payment means issued by the private sector, but it's also a standard which needs to be met. Where there might be a possible differentiating factor. So one is, of course, the universal availability and acceptance, something which Inge mentioned earlier when referring also to the role which legal tender can play. So today, at least in most countries, or at least certainly in the country I live in Germany, one can still expect to that everybody would accept cash, that with cash you can pay anywhere and that you have easy access to cash. Of course, it's a network effect. It relies on maintaining certain social conditions to preserve that. But that's something which, let's say, at least in Germany today, a credit card may not be accepted everywhere. So that confidence on the side of the payer of having a payment means with which they can pay anywhere is a strong reassuring factor. The other element where end users, where citizens express view on something which would be desirable, would be the possibility to have open payments, open loop payments. If I can describe this shortly, so today, for example, if you're calling from a mobile phone, whether you're calling a mobile phone belonging to the same company with which you have contracted, or whether you're calling a mobile phone from another company, you have little doubts that your call is going to get across. That does not happen that much in payments. Today, for example, if you want to make a payment to somebody via PayPal, it's reliant on the fact that they have also adopted PayPal, just to give an example. So typically, the world of payments is more a closed loop world in which we all need to be in the same club in order to transfer money from one to the other. So because of this universal access, I would say, and universal acceptance of cash, that is something which citizens would like to take to the digital world. Overall, one would say that there are certain features of cash, its offline availability, the privacy that it generates, which, in considering a CBDC to go along cash, there are many people who really there appreciate the certain features of cash, which they would like to take as much as possible to the digital world as payments become more and more digital. Yeah, so I think with this would give a bit of an overview of what feedback we got from end users, from citizens, which is something very important in a retail CBDC, to really understand what value it can provide to different citizens.
Liana, you're on mute, please.
Thank you, Igor. Thank you, Ignacio. I will conclude that convenient, fast, and easy payments without compromising security are preferred features and desirable features and functionalities for a new digital payment method, more recognized as digital wallet. When it comes to setting up the new digital wallet, the onboarding must be user-friendly, fast, and easy. In line with convenience requirement, participants would not wish to have to purchase and learn to use yet another device, preferring to integrate the wallet into one they already own and use. And as a result, they would prefer the wallet to be seamlessly available on a broad range of a device and operating system, so users are not tied to a particular solution. In the national context, Mr. Velichkovsky, how did consumers behave during the pandemic regarding the use of payment instruments? How digitalization of payments evolves in the post-COVID period?
Thank you, Biljana. In line with global trends, we have also noticed a significant surge in digitalization of payments, in particular since the start of the COVID pandemic. Nevertheless, we also need to say that digitalization of payments has been on the agenda of the regulators and payment service providers in the country for a very long time before the pandemic. Credit transfers and payment cards are our main cashless payment instruments, which are used for initiating payment transactions on Macedonian payment services market. During the last 5 years, both of them rose, but the payment card transactions had stronger growth, actually on average over 20% on annual basis, which has been even stronger during the pandemic. In particular, the internet transactions exploded during pandemic when people, as in many other countries, increased the internet shopping substantially. For example, the number of internet transactions in our country more than doubled in 2020. The strong rise in payment card transactions has been supported by wider adoption and usage of cards, but as well as by improvements in the payment infrastructure. In the past, banks invested a lot in switching to contactless payment cards and contactless POS terminals in order to make the payments more convenient for our consumers. In the last few years, we have a significant trend in virtualization of payment cards on mobile phones, which is advancing quite much. We can say that today, 8 out of 10 card payment transactions are initiated in a contactless way. This is an increase of 2 transactions more when compared with the period before the pandemic. On the other hand, cash withdrawals noticed significant decline during the pandemic, but it lasted temporarily during 2020. Yet this is only in terms of number of withdrawals. The consumers took out cash less frequently, but when they did it, they withdraw larger amounts. Connecting this with strong increase in the number of card payment transactions that we registered during the pandemic, this probably suggests that cash is increasingly held as a store of value, while his role for payments purposes is declining over time. But we also have to say that this is not Macedonian case specific, given that it was noticed globally as well, and is probably driven in part by the public's desire to hold cash for precautionary reasons in times of high uncertainty. Pandemics somehow changed the public's payment behavior. Many consumers switched to online payments, more digital payments, contactless payments at physical shops. But it seems that a pandemic does not appear to have affected the perception of consumers for cash being still a safe haven. Macedonian consumers, like consumers in other countries, like the cash for many reasons. And Mr. Terol explained the reasons why citizens of the European Union like cash, mainly referring to its accessibility, availability, and in particular, anonymity. As we know, cash is accessible 24 hours daily, and we cannot say the same for other means of payment. Cash is typically available to everyone and allows us to transact anonymously. So having in mind these attractive features, it seems that it will stay with us for a very long time. Yet in the era of digitalization, the central banks actively investigate how to provide the cash to the public in a digital form. And during these 2 days, we will discuss comprehensively and learn a lot from our panelists and forthcoming speakers. So, Biljana, I will stop here.
Thank you, Igor. That was a good your exposure about the national context of the consumer behavior during the pandemic. Thank you very much that you share with us all these figures. So I will go now with the next question, considering the challenges posed in cross-border payment in terms of fees, speed, and efficiency. Mr. Soderberg, how we should respond to them, considering that the speed up of digital payments encourage countries to undertake activities to encourage cross-border payments?
Yeah, I think this is one of the big questions, and this is something I've been involved in quite a lot personally, from the G20 roadmap to enhance cross-border payments, and particularly in how the question how CBDC could potentially help enhance cross-border payments. I think we are increasingly reaching consensus that the cross-border system of today is increasingly obsolete, and we are committed as a global community to increase efficiency of this. And I think the big problem we have is basically that our payment systems were built for national purposes, and they evolved gradually. And now we are having an increasingly globalized world with increasing need to pay among nations. And then, of course, the question is, what should we do now? I think we have two main options. One is to build on existing legacy system, try to work on those, standardize them, etc. The other is to start with a clean slate, which I think is the attractiveness also of CBDC, that this could be a new system which we could create, which is designed from the beginning with cross-border thinking and interoperability, built with that in mind. And I think the challenge, therefore, to already now to think deeply and collaborate already now before these systems are existing, and to already now start to think about how do we design CBDC systems with cross-border interoperability in mind. We are seeing a lot of these challenges. I mean, the challenges are basically the same as the legacy systems are facing, but also some of the new systems, such as different standards, different legislations, different principles for AML, CFT, etc. There is also considerable technological uncertainty. What technology should we use, etc. And there are a few promising technological experiments already out, the MCBC bridge, etc., etc. There are many of these, but I still think we are all assessing now which path should we take, or can we combine them? I think the discussion of hybrid technology, I think, is highly important. We should always remember, though, that even if we build a technological platform or get all the technology set, we should remember that the institutional factors, such as different legislations, might actually be more complicated in the end. So we can build a technological platform, but it might be used to a small extent for cross-border purposes because of these inconsistencies in more institutional legal factors. So maybe my colleague from the ECB, I think you had worked on T2S, so most likely you are able to know more about this than I do and these challenges. So I think what I really want to point out is that now is really the time to start collaborate, share information, and really work on this, because now it's also the time before these systems start to exist. So this is also the time to do that. But we also need to consider, if we are successful in doing this, if we are successful in increasing the efficiency of cross-border payments, we must also think about the macro financial implications. So basically what we are saying is that we want to increase the speed of cross-border payments, and we also want to decrease the cost. And that is, of course, very good, but we also need to consider what are the potential risks with that. And a few of those is, of course, currency substitution. So if currencies are more easily available, cheaper, etc., there is a risk that in some jurisdictions there might be increased currency substitution, which could then lead to diminished monetary sovereignty. And we spoke about that early in the panel. It could also lead to financial vulnerability because of currency mismatch, undermining of the central bank's role as lender of last resort. We could also see faster capital flows. Again, this could be good, but it could also be bad for many reasons, for instance, such as lower thresholds to trigger outflows of capital. So we could actually see more frequent potential digital runs on countries' banking systems and currencies. And we could also see quicker synchronizations of global shocks and global business cycles. So I think, again, this points to thinking already now ahead when it comes to design of cross-border CBDC. How do we design? How do we take these potential macro financial implications into account already now when we are thinking when building the blueprints for these systems? So should we add, for instance, limits on how much and how quick you can actually transfer money across borders? Should we have limits on it, fees, etc.? And also we can consider also a building system in which it's actually impossible to move the digital currency outside of the issuing jurisdiction. So, for instance, what you could build a cross-border system in which the currency automatically is exchanged into another currency as it crosses the so-called border. You can consider such systems, which is also what is being considered in the MCBDC bridge at this point. And this, I mean, all this is in a sense paradoxical, because in one sense what we want is to remove frictions of the global payment system, but now we are saying we want to add back some of the frictions. So that's paradoxical. So again, we need to think hard about this. How do we strike a good balance between, on the one hand, increasing efficiency, speed, and cost efficiency, but also reducing risks? So again, we need to think hard about how do we get this design issue right. And again, I think the answer is international collaboration and information sharing. No one can do this alone, and we need to really join forces as a global community to handle these risks. So that is what I had on this, and I'm looking forward to hearing my colleagues' thoughts on that.
Thank you, Gabriel. With your explanation, you made an excellent bridge from nowadays to the new age. I will pose my question to Ignacio about this new age. CBDC would ensure that the citizens have free access to a simple, universally accepted, secure, and reliable means of payment. So what are the challenges of the central banks in relation to the fulfillment of their current tax, monetary and financial aspects? So the topics that we would like to achieve with this question and your answer is the motivations of central banks to develop central bank digital currency.
Thank you, Biljana. And indeed, Gabriel already provided very good questions in this respect, pointing to some of the challenges. I would start by saying there's a question of whether a retail CBDC issued would be too much used as a store of value in particular, because it's the safest form of money in an economy, because it's the monetary anchor, or too little used, in particular as a means of exchange, because we all know that for a new means of payment to take traction, it is something which necessarily is an evolutive process, which cannot just take place like that overnight. So this is something on which we have reflected a lot. And from a Eurosystem perspective, we say that we would like the digital euro to be used predominantly as a means of exchange, but without being used excessively as a store of value. If you look at least into the budget composition of many euro area citizens, probably they might not have necessarily, we might not have a lot of cash in our pockets. We may have more deposits in a bank account, but still that little cash which we may have in our pockets circulates, one could say, with a higher rotation. So how to make it so that the digital euro indeed has those network effects as a means of exchange, to be available and to be accepted everywhere, while at the same time not requiring that citizens need to hold large amounts of it. So we have during the project come up with many answers to this question. So limits is definitely one of our answers. So holding limits, we consider that an individual citizen should not be able to hold more than a certain amount. 3,000 euros has been flagged as a possibility, but this still needs to be decided much closer to the point of issuance. So it should not be, we want to make sure that it would not be leading to a disintermediation, to an excessive conversion of bank deposits, but it would still allow citizens to fulfill at least some of their retail payment needs. We don't want also so for a digital euro to act as a monetary anchor, it doesn't require that any citizen makes all their payments with digital euro. It requires rather that most of the citizenship make some payments with digital euro, just like they would be making some payments still with banknotes today. So with holding limits in particular, also tiered remuneration, but probably holding limits is the strongest tool to really have confidence that the digital euro would not become an excessive store of value, because you can in fact calibrate this actually much more than you can do with cash today. So it becomes really more of a challenge to address the question of a new means of payment gaining traction. Already Jevons in the 19th century wrote about how frequent it is that sovereigns issuing new currencies don't afterwards have necessarily the traction. So in that respect, what is the public network which legislators provide to availability and acceptance of a digital euro is very important. If you look into what has been the secret of the success, if I can put it like that, behind the success of say Swish in Sweden, Ideal in the Netherlands, or Bizum in Spain, it's been in all cases that there's been a coalition of suppliers, basically the banking industry, to move in a coordinated way in a direction of facilitating instant P2P services to their clients. So that element of a public-private partnership underscored by the network effects which the legislator is ready to provide to the digital euro will be very important. Another challenge is many people are probably looking into digital euro as to how can I preserve, as payments become more digital, how can I preserve the level of privacy which I have with cash today. And two answers that we provide to this, I think, with the legislator, there's the consensus that we should look into probably for lower value payments to have less strict, so privacy AML requirements, so adapting requirements to the value of the payment. And another answer that we would provide if we issue a digital euro is the offline digital euro. So an offline digital euro would be what would most closer mimic cash, in the sense that any payment with an offline digital euro would not be seen by any intermediary because it's offline. The payment takes place on the basis of the security factors in the device, and the second element on that is the offline connectivity, which is a very important factor for business continuity, to be ready to continue payments also in the digital age in a situation of an electricity outage, which Inge mentioned earlier. And indeed, as probably more than with any other system, because you can imagine that a CBDC can become a very visible target for cyber risks. The element of ensuring business continuity is one of the key challenges of a CBDC. Gabriel mentioned earlier the importance of coordination within central banks and bringing in cross-currency facilities and cross-border use. So one of the factors that we're considering is if there is a certain holding limit for euro area citizens or euro area residents, what would be the appropriate limit, if any, for tourists or other or residents or citizens in other EU countries or neighboring countries? What would be the appropriate amount of maximum amount of digital euro that might be held? And that's indeed a matter where monetary international agreements on monetary law are very important, because we do not want any country to adopt a digital euro without wanting to do so. So monetary sovereignty of each country must be respected, and in fact, it becomes with a means like CBDC, which you can control, you have better means of doing so than with cash. When you issue cash, you don't know ultimately to which country it's going to go, or where it is going to be held. So an important question is, will and how will CBDCs facilitate cross-currency payments? And here it's important to emphasize that, like instant payments, CBDCs have two factors to facilitate cross-currency payments. So one would be the fact that they are 24/7, 365. So time zone matters are not an issue. And the second one would be the fact that they necessarily need to be settled instantly. There's no possible credit risk there. So these are two factors in which a CBDC can facilitate cross-currency payments. It's true that those factors are already available today in instant payments, and that's also why as we progress respectively with our respective projects, we have a strong communication with the main central banks in the world to know where we stand each other, to cross-fertilize. We cannot, of course, make the issuance of a digital euro dependent on 7 other central banks going live with a CBDC, nor reciprocally, but that cross-fertilization process is very important to have the means to facilitate cross-currency payments with a CBDC. And I saw a question earlier on the ecological footprint of CBDC digital payments in general. It's also a very important factor for us. I think in general, when a central bank considers whether to issue a currency, I've mentioned earlier monetary anchor, and which means basically the wide availability to all citizens and the wide usability of the currency, and strategic autonomy. So those would be key factors that could lead, in this case, the Eurosystem to issue a CBDC. But at the same time, there are many other factors which, like ecological footprint, on which, if we issue a CBDC, we need to ensure from a social responsibility perspective that it would have the minimum ecological footprint. And studies have been done, for example, by Banca d'Italia, comparing the ecological footprint of tips for instant payments with Bitcoin. So it's a matter on which we know that we need to be socially responsible. I think in general, we also from an ECB perspective, we have our banknotes colleagues have tried to measure the ecological footprint of banknotes to compare it with the ecological footprint of existing digital payment means, and that's ongoing work because it's a factor that we in today's world we necessarily need to take into account. I think I would stop here and then probably take the opportunity for questions later on these key challenges.
Thank you. Very interesting motivations of central bank to develop central bank digital currency that you share with us while answering in this question. Thank you again. So, as we have seen, the common thread running through this trend is digitalization. One of the consequences of digitalization is the opening up the market to new players who will, in a short space of time, of course, have become highly respectable competitors, at times even aggressive and capable of making even the most important groups worry. So I will conclude the regulators should establish a legislative framework encouraging faster digital transformation. Mr. Veličkovski, what regulatory approach is followed in North Macedonia as a response to technological changes that we heard through answers of before's questions?
Thank you, Biljana. Well, as we have seen, the regulatory perimeter in the payment area has broadened substantially and became relatively complex during the last decade in the European Union. Given its regulatory role in the payment systems, the central banks have been actively engaged in defining new regulatory framework for providing payment services. Our National Bank and the Ministry of Finance have also been involved in drafting new legislative package targeting multiple goals in digitalization of payments. Spurring the digitalization of payments is one of the key goals of this new legislative package. We know that the incumbent payment service providers have adopted new technologies in their payment products, given that we use them on a daily basis, but still there is a lot of space and necessity for innovation. By transposing the wide set of EU directives, in particular those such as PSD2 and e-money 2, we expect that the number of new non-banking payment service providers will increase, and in particular those from the fintech sector. Moreover, we are opening the market for new operators of payment systems. Also, the open banking system and APIs will allow banks to share their data with third-party service providers, opening up an area of opportunities actually for innovation. We expect that all this would then allow consumers to benefit more and to benefit much more than they have opportunities today, to have better choices between different types of payment services that are going to be offered in the future, and better choices between the different service providers. All this is expected to encourage more digital payment behavior. Apart from increasing the competition, with the new national legislation, we also target enhanced consumer protection, given that we transpose relevant provisions from PSD2, reflecting clear differentiation of the liabilities of consumers vis-a-vis those of payment service providers when we discuss about, for example, fraudulent transactions. We expect that consumers will be better protected against fraud and other types of payment incidents. Regarding the losses that consumer may face, except in cases of fraud and gross negligence by the payer, by the consumer, the maximum amount a payer could, under any circumstances, be obliged to pay in the case of unauthorized payment transaction will be around 20 euros. This is a threshold relatively low in order to protect more properly the consumers. Moreover, transparency and comparability of fees is a very important aspect of consumer protection, and it is also important for increasing competition, given that consumer who would like to purchase new payment account or change payment service provider can easily identify the services they are most interested in and evaluate which providers charges the lowest fees. All this relevant information for the fees the payment service providers charge will be available on our National Bank website, expecting to start from the third quarter next year. We also have to recognize that financial inclusion is a very important goal in the regulator's agenda. In our case, in terms of access to payment accounts, we stand relatively well in comparison with developing countries. And this might be due to some extent to our national regulatory approach or framework, obliging that all different forms of income, including pensions, that have to be transferred in a cashless way to the payee's payment account. Yet when we are compared with high income countries, and in particular with those from the euro area, we can notice important gap in access to accounts. So this means that we still have some unbanked population. And transposing the payment account directive in our national legislation may provide some support in closing this gap, given that the new law will oblige the credit institutions to offer payment account with basic features, which is mainly intended to provide basic payment services to unbanked vulnerable consumers. However, in a highly digitalized world, we know that having an account with payment service provider does not guarantee by default an appropriate level of financial inclusion. What we have noticed from our payment statistics data regarding the payment card holders is that elderly group of adults of our population use less payment cards compared with younger generation in daily purchases. They prefer much more to withdraw the cash from the ATMs or at bank counters and then use it for buying goods and services. Thus, if we are working on cash digitalization, we have to find a way how to onboard elderly segment of our population on this digital payment trip. And the last but not the least goal, for which I'm going to discuss shortly today, is related to necessary improvements in cross-border payments. Gabriel already reflected on some of the inefficiency aspects of current cross-border infrastructure for executing payments. We all know that we face challenges in cross-border payments, in particular those related to high costs and low speed. But we also know that they are somehow intrinsically inefficient because there is no one single global payment system connecting all payment service providers and their payment service users. Therefore, the regulatory power of any country, in particular small countries, aiming to overcome the current challenges in cross-border payments is relatively weak. In our case, the forthcoming opening of the market for new payment service providers might diminish to some extent the inefficiencies, but it cannot overcome all of them at once. That's why we need to work more hardly on some initiatives that involve regional integrations. Our efforts, for example, to fulfill the SEPA requirements might award us with direct access to the European payment infrastructure in the medium to long run. So all these initiatives, in particular those that are supported by the EU institutions, aiming to greater regional integration in the payment area, should be embraced by all the countries in the region. And connecting to our today's discussion, which dominated our panel regarding the CBDC, exploring the potential of cross-border CBDC is complementary path for us in this regional in this attempt to regionally integrate, and we have to follow this complementary path, given that in the long run, using the cross-border CBDC might reduce the barriers for executing cross-border payments, in particular achieving our goals for faster and cheaper cross-border payments. So I will stop here on our national perspective and approach how to set the regulatory framework in order to encourage more digitalization in the payments area. Thank you.
Thank you, Igor. It was very interesting to hear how North Macedonia is going to digitalize the payment with support of National Bank, of course. So thank you, Mr. Soderberg, thank you, Mr. Terrell and Mr. Veličkovski. It was an honor to have you on the panel today, but I will keep you just a few minutes on the stage because I saw that there are some questions in the chat box. I will go with first question from post from Nikola Paunkovski from KIPS. I could say that some of the points of this question was touched by Mr. Veličkovski in his last exposure on the past questions. So if you have something to add, Igor, reading this question, so please do not hesitate to do it. Mr. Paunkovski is asking this question, having in mind that, as he said, association to European Union become long-term and unpredictable process with uncertain end, and Macedonia could at least to move forward in the integration with financial structure in the European Union by making step from non-European Union, not SEPA, to non-EU SEPA country. So are there an obstacles, or it's estimated that there are no benefits? He is asking if it's expensive process that we cannot pass. Mr. Veličkovski.
Yeah, thank you.
I think.
Yeah, thank you. Thank you, Mr. Paunkovski, for raising this issue for discussion. It's very important one, and all of the panelists today somehow touched the cross-border aspects of payments and current inefficiency in this segment, and what we can do as regulator, in particular as central banks, having these combinations of roles in the payments to address these inefficiencies. I can say that we have been working very hard during the last decade, in particular during the last few years, on aligning our national legislation with the EU acquis in the payments area. By transposing a huge set of EU directives and regulations, we are actually trying to close this regulatory gap. And this is very important precondition for joining the SEPA, apart from those related to political criteria. Regarding the regulatory aspects, we need to transpose all the relevant directives and EU regulations, and we believe that substantial part of this regulation has been already transposed in the new law, which will be applicable since January next year. So from that perspective, we are approaching more closely SEPA, but still there are some other regulations and directives to be transposed in near future. And also some regional initiatives are going on, as our governor Angelos Kabežoska already mentioned in her speech. We are, as a region, the Western Balkan, making efforts together to access the European payment infrastructure, in particular TIPS, which is expected to provide us direct link and enable us to make faster and cheaper cross-border payments in the SEPA area. And this is important for all the countries in the region, given that the largest part of our trade is going on with the European Union countries and is executed in euros. So if we achieve this goal in medium to long run to access the European payment infrastructure, but of course by fulfilling all the SEPA criteria, then we can reduce the inefficiency of cross-border payments significantly in our Macedonian case, but also generally for the whole region. So I would say that there are benefits, and we are not, and we work on closing these regulatory gaps intensively in order to get the access to European payment infrastructure. So the process is evolving and progressing, I would say, in this direction. Thank you.
Thank you, Igor. Next questions. I will say that, okay, Mr. Tony Mirchevsky asked about digitalization and depending on the technology that will not cause environmental problems, especially in terms of energy. I think that Ignacio touched the point of different motivation of central bank to issue central bank digital currency. So if you feel free, Mr. Ignacio, to answer to this question, or maybe Gabriel, you have to add something. Igor, you are also welcome.
Yes, perhaps a quick addition to what I mentioned earlier. Perhaps in today's situation in Europe with the invasion of Ukraine, with the energy shortage, it would be even more irresponsible, I would say, to have a high consumption payment system in general. And I think, let's say, a lot has been said, and rightly, about the high energy consumption of cryptocurrencies stemming from the competition between miners on the proof of work. But I think it's important to highlight that in today's digital payments, in the payments, in the card payments which are processed today, that energy consumption is really a fraction, is really minimal, as long as it's not relying on the need to do proof of work in order to confirm settlement. So it's I would say, generally speaking, for most of the payments today in the euro area, high ecological footprint is not the question. That question of high ecological footprint comes in particular when mining Bitcoin and others.
I can add also, I agree completely with Ignacio. I think it's important to realize that the high energy consumption of proof of work, such as in Bitcoin, is by design. It's not by accident. So the reason why they have it is simply to create an artificial cost for mining, because they want it to be, or the persons who designed it wanted it to be highly energy demanding, because it should mirror mining gold. That's the very reason. So it's not by accident. It has nothing to do really with something inherent in digital payments. It is by design, wholly by purpose to do so. So that is something to keep in mind. It's designed to be energy intensive. It's not it doesn't have to do with it being digital.
Thank you. Thank you, both of you. Next question, I think that Mr. Veličkovski also answered a little bit, explaining how the Macedonia legislative is planning to go in the future. So if you have something to add, Igor, please, on the next question posed by, from Tatiana Davchev. So how? Yeah.
Just shortly respecting the time limits of this session, we have been actively communicating with the stakeholders during the preparation of the law. We intend to do the same also in this process of preparation of bylaws. We are almost at the end of our internal process of drafting the relevant bylaws for the fintech sector, for non-banking payment service providers. So we expect that we will start discussion during this month and discuss intensively during October and November before their adoption by the end of the year. So, Ms. Davchev, thank you for your question. I hope I shortly provided the answer to it.
Thank you. And I think that our time is close to 11. So we have to finish our panel discussion and session. We have few questions that I will try to answer them while the break, or maybe to consider them for the next event, because they are very, very interesting, and they could be discussed on the next panel discussion on the next event. So thank you, Dimitri and Oksana. Unfortunately, we don't have time at the moment to answer to those questions. So please feel free to send us later on or after this event. Okay, thank you again for participating in this panel discussion, and thank you that you have all present here. Now we will have break 15 minutes till 11:15.
Thank you. Bye.
Thank you so much. Bye-bye.